The UK, in a deepening recession with a weakening currency. The US, where the only growth area seems to be unemployment. Egypt, a solid economy and still growing.
In relative terms, we're doing much better than the average emerging markets. And the emerging markets, as you know, are doing much better than some of the advanced economies.
This was the message officials from Egypt were selling on a lightning tour to two traditional financial capitals struggling in a global downturn. First stop, London.
In Egypt, due to a solid real economy and due to the robustness that exists in the financial market, will continue to be attractive and waiting for investment.
And Egypt is in pretty good shape. Growth may be down from its 7% peak over the boom years, but despite the global recession, Citigroup still predicts 4.5% growth this year, thanks in part to a healthy banking sector that managed to avoid the fallout from subprime.
Banking sector is sound. Still, the companies that are listed on our market, they are hit, yes, they have been affected by the crisis, but they are still performing well. Maybe the profit margins are less than before, but they're still making profit.
Next stop was the US, where the Minister for Investment toured the NYSE.
The global downturn came just as we were hitting our stride, reaching unprecedented growth rates and promising levels of job creation. But Egypt is also the target for significant US and multinational investment.
A belief backed up by the figures. Global FDI topped $1 trillion in 2008 and will drop 10 to 15% this year. Yet Egypt is still pulling in the cash.
This year, the first half of it, we got something like $4 billion. It's very difficult to annualize the FDI and capital flows figures from 6 months to 12. But I think we'll be within the range of $7.5 to $8.5 billion.
The telecoms business too continues to ring in decent results, attracting Western multinationals such as Orange and Vodafone, as well as local players like Erascom.
And just to give you an idea, even in spite of the turmoil of the economic turmoil, we have grown in December and January by 2.2 to 2.3 million new additional mobile users.
New users predominantly from the country's huge youth population. Every year, 250,000 graduates come onto the job market, boosting Egypt's growing outsourcing industry. But for many, the work is not there yet, raising the spectre of unemployment and with it, flare-ups of unrest.
The tougher the economic situations become, the more risk there is that there could be social unrest, that you're seeing more demonstrations in Egypt, and that's a risk that has to be monitored and has to be watched.
The poverty level is roughly a fifth of the population. To bring that down, the Egyptian government needs to keep creating jobs and stimulating growth. With that in mind, it rolled out a $5 to $6 billion stimulus program, with the emphasis on incentives for trade and infrastructure development.
This phase is really concentrating on poverty, improving the levels of the livings of the Egyptians, providing more on focused subsidy targeted programs.
But even more important is to maintain momentum.
I'm personally very pleased to see the Egyptian government remaining committed to reform despite the economic environment, which is clearly more challenging.
The other big challenge is competition. The Egyptians make a convincing case for inward investment, but so can plenty of others. They may be in better shape than Western economies, but it's how they fare compared to the likes of India, Turkey and South Africa that matters. To keep ahead of the pack, Egypt will have to play to its strengths.
We are being selective. We're trying to attract and really showcase and to promote the sectors that we believe we have a very solid value proposition in, and that is basically what we're trying to keep on doing.